All right, hey my friends, welcome back to Premier Study in Investing. Very glad to have you. Very excited. Going to basically be doing a follow-up to this video right here where I was looking at a lot of different diagnostic tests. Focusing this video on the antigen test because there's a new kid on the block. There's a new player that's come on the scene. There's now 5, not just 4, that have FDA approval on the antigen test side. So we're looking at BDX, Qdel, ABT. So it's Abbott, Qdel, and Becton Dickinson. The new one is called Access Bio, and a company out of South Korea, and so we're going to look at them, but mostly what I want to do is something very, very, very simple. Basically just do a comparison of Qdel, Abbott, and Becton Dickinson, because I think these are the 3 major ones in the US. They're going to have most of the market share when it comes to antigen tests. Antigen tests are these ones that are fast, 12 minutes for the fastest one from a UK company. And in fact, Access Bio says they can do it in 10 minutes, so that's why I'm including them. 1, because I think maybe you'll hear about them. 2, it's because it's going to save people 5 minutes if we use their test. So that's one thing. But generally, these are 15 minutes. All the ones that from Qdel, from Abbott Labs, and from Becton Dickinson all take 15 minutes. So I want to do a financial ratio comparison, and I loaded up on Qdel on this, basically. I don't hold any Becton Dickinson, I don't hold any Abbott. I just got the Qdel, and it's basically because of the ratios. So PE, you'd like to have a lower PE if you could get it. And so we'll go down here and start comparing these. So Qdel 75, Becton 83, Abbott 64. So Abbott wins that one. Price for forecasted earnings, you'd like a low price. So 10.6, 19, 26. So Qdel wins that one. Price per sales, you'd like a low one of those. 17, 4, 6.5. So Becton. Price per tangible book, we don't have that for everybody. Price per cash flows, we do. Looks like Qdel is actually the most expensive. Price per cash flow, 21, 29. And then price to earnings growth. You'd like to have a peg of under 1, I believe, is the best. Now, sales growth by percentage 29, -1 and 1, so Qdel all the way. 5-year sales growth projected 23, 15%, 9%. EPS growth 1 year, year-over-year, 12 trailing months, 115%, -29%, 5.4%. EPS growth, we don't have anything for Qdel, but negative BDX earnings per share growth over the next 5 years, and 12.4% growth. EPS growth forecasted 1 year, 429%, -14, 2.6. So I don't know who's running these. I don't know if these are coming from, they're probably not coming, I don't know who's running these actually, because these are forecasts. So it's not like they're just taking these off the balance sheet or something like that. So they have to use some kind of projection based on something. It could be Schwab that's running these. By the way, I've heard some crazy stuff about Robinhood. I don't know if you get any things like this, these screeners, these ratios. You probably do, but I don't know these side by side. Anyway, I really like it. Dividends, these aren't big dividend plays, so I'm not going to go through all of it. 1.3% yield annually for Becton Dickinson, 1.3 for Abbott, nothing for Qdel. One concerning thing with the Becton Dickinson is you can't have 109% of your revenues coming in going to cover your payout for your dividends. So they're going to be cutting dividends. I mean, almost for sure, 109% dividend coverage ratio. They don't have enough money coming in to cover their dividends, so they don't have coverage. So they're going to be cutting it, or else, have some increase in sales. Gross profit margin 66%, 45%, and 57%. So Qdel. Operating profit margin 29, 7, 12. Net profit margin 23, 5, 9. Cash flow margin 23, 20, 14. Cash and short-term investments as a percentage of total cash asset, total current assets, 24%, 32%, 29%. That, it just depends upon how much cash you'd like your company to have. Some people, they really want a lot of cash with all that's going to be coming up. Anyways, go down here to book value per share. This is basically how much is the company worth if you pay off all their debts. So Qdel trades at like $275 right now. The book value is $14.50. BDX, I think somewhere around also $300. Has $82 in book value, and then Abbott's trading at like $110 about now, and it has $17 in book value. Tangible book is a little bit different. It's like if you overpaid for something, like if you have goodwill on your books, you overpaid for a company you acquired, or if you had to like discount or lower the value, make some adjustment to, say, some assets that you had before that you counted. Anyways, both Becton and Abbott have negative tangible book. So this is the book value minus the intangibles, gives you tangible. Enterprise value, so very different size in these companies, 11 billion for Qdel, 85 billion we'll say for Becton Dickinson, and Abbott is actually a huge company, $211 billion. Now here's where it gets really interesting. The current ratios look like they're all about in the same spot, about being able to cover their short-term liabilities. But the long-term debt, check this out. No long-term debt for Qdel. Really amazing to me. I mean, I know interest rates are low, but still, there's a lot of people concerned with companies defaulting, with having all this leverage, all this debt on their books. 17 billion for Becton Dickinson, 18 billion for Abbott. Long-term debt to capital, 0. So that ratio for BDX is about 40, and the ratio for Abbott is about 36. Total debt to capital, you can see that here. Long-term debt to equity is a percentage. 71% of their equity is equal to their long-term debt. Return on capital invested, 20%, 2% for BDX, 5% for Abbott. For me, these ratios were just really telling. Return on assets, 17%, BDX had 1.7, Abbott had like 4.5. Return on equity, 27, 3, and 10. Return on investment, 20, 2% for BDX, and 5% for Abbott. Sales per employee is also, you can just see, I mean, it's almost double for Qdel. So you could look at their stock chart. I know you can get it on your phone. I'm not going to bring it up here, but they're vastly different. Qdel has been doing great. BDX and Abbott have kind of been trading sideways. So I think this is really the story, especially with that debt part and then just some of these other ratios. Quickly, I want to show you, this is not a peer-reviewed article, but it's basically looking at, there's 2 point-of-care tests that we're looking at. The one from BDX, which is called the Veritor, V-R-I-T-O-R, BD Veritor from BDX, and then Qdel has the Sophia 2. Okay, these are both antigen tests. These are both point-of-care tests. So what they do is they take both of these from these companies and they compare it to a PCR test. PCR tests are slow, but they have higher accuracy. If I didn't say it before, I don't know, but this has not been peer-reviewed. What they basically find is that, this last sentence, the BD Veritor and the Qdel Sophia 2 antigen tests had good agreement for the detection of the sickness, but discordant analysis favored Veritor. Basically, they did nasal swabs or oropharyngeal swabs from 251 participants. And the thing was, the discordant analysis showed that the Lyra, this is the PCR test, showed one positive that was missed by the Ventador, so the person was positive with the sickness, and the Ventador missed it, and then the Sophia missed 5. So 5 positive missed by the Sophia, only 1 missed by the Veritor. Both of them make this 80% acceptable level as set by the FDA for the EUA acceptance, so you only have to get 4 out of 5. Apparently these folks missed 5 out of 251, and BDX's machine missed 1 out of 251, so it's pretty good. It also goes on to say that the Veritor did have 1 false positive, so the Veritor said it was a positive result, but it was negative according to the Lyra. The Lyra is doing the PCR, so we're assuming that the Lyra got it right, the Ventador got it wrong, so they said, oh, this person is sick when they weren't really sick. Apparently none of those happened for the Sophia 2, because it's just, I'm assuming that because they don't say it explicitly, but they don't miss any false positives by the Sophia 2. They end up concluding the same thing. They both showed a high degree of agreement. Great. I mean, it is faster at 10 minutes than any of the ones that we're looking at here. At 15-minute tests for BDX, for Abbott, for Quidel, they're all saying 15 minutes, you know? And so to see one come on the market that does it in 10, who wouldn't like to save 5 minutes? I mean, I think we all would. That's all I really have. Hope you enjoy. We'll talk to you guys next time. Thanks.